Alright guys, I'm back with another video. Okay, so my plan is to stay here for maybe an hour, maybe. Not gonna be here too long, but really depends on how quick I could get through this. We will see. But let's see, I was watching Moran's earlier. It was a good show, as always. Let's see, I'm gonna turn on real quick, 1 second. Okay, Lionel's here. Okay, let's see. Okay, so alright, so let's see. Today price action was interesting. So I did add a couple here, a little bit more, not too much there, couple shares here and there. Now my Roth IRA just cleared, that when you transfer money, just take a couple of days. Now it's the rest of the money hits the account, so I'm able to kind of add a couple here and there if I wanted. Obviously, I don't want to add too much because, hey, I'm expecting the SPY to come down, and how my prediction is that it's going to come down with the SPY as well. So whether it's going to hit $12 or even $10 or whatever, I have some dry powder, so to speak, quote unquote, to scoop more shares. But as far as the day-to-day buy-in, it's still there. Anyway, so that's that. Pretty excited about that, and so that's why I mark it here. I start this the position over here too. So excuse me. So as I was saying, I might not stay too long. 2 shares this morning. Okay, that's good, Lena. Thank you. Okay, so we have kind of a really small volume today. It's 2.3 million shares being traded back and forth right there. And I take a look at the exchange right here. This is the website that I go to all the time, so I don't know if it's accurate or whatever. You have to do your own research there, but hey, I have no reason not to trust it. So that's what I'm going by. So if you look at it right here, total shorts is up to 1 million shares right there if you look at the volume instead of the percentage. But it's a lot, based on how many shares being traded back and forth, it's still a lot. So 100 million shares being shorted, and then you have the volume being reported is only 1.3 million shares being traded. So that's hardly anything at all, right? And then, whatever happens over here. As far as the option chain, it's still, max pain is 1450, so I'm sure it's gonna kind of hover around that's price point. Again, max pain is a sweet spot for market maker or for whoever sell you the call option, so that the equilibrium is delivering the maximum pain to retail investor or to option buyers, right? Whether you're buying put or buying call. So that's what it means. And usually, they want the sweet spot because that will make the market maker the most money. That's why they tend to hover around there. Okay, let's see. Ooh, sorry, So today is the 16, but next week call would be 14 max pain, so the price might come down to then. It really depends on who buying the call option here. It seems like 20 is the big resistance there because it's like 6,000 contracts there. The next biggest one is $16, and this is for next week, by the way. This one puts, there seems to have a lot of puts over here next week, so I don't know, maybe they're trying to bring the price down to $12 versus $11. So that's why I see the increase in buying puts at this price is whether that's the one that kind of bring the price down as much as they can. I don't know if it's a market maker who's selling those or buying those or whatever. That's on them. Perhaps, again, this is how they acquired shares, so to speak. If people are panicking and want to give them money, premium money, obviously. And so just think about it, like today's call option right here, all of these expire worthless right there. All of that liquidity expire worthless. And this is why buying call option is so risky, because that could be you right there. All of this call right here, this option right here, all of that expire worthless, meaning whatever you bought it for, it's worth nothing right now, right, at the moment. And the same way for put buyers as well, down here. 19,000 contracts are being worthless right now, right? So that's that. So I have a small little things that I wanted to talk about, but before that, let me look at Bitcoin. Bitcoin is still at 52,000, right? 52,000 for this week right here. I mean, I don't know, like over the weekend it might go higher or lower. It really depends. But as far as like the PMI, wait, am I saying that right? There was an indicator that inflation might go up again because of, I think it's the PPI, you guys. Hold on, which one is kind of reported like 0.3% higher than expected? I think they have CPI, seasonally adjusted. Is it imported? I should have written it down. Man. Anyway. Is Ethereum still a good buy? I don't know. I mean, it's depends on what your time horizon is. I know, so I don't have any Ethereum at the moment, but I have other coins. But again, it's very risky because of the regulator and all that stuff. So I wouldn't recommend it right now. I mean, anything in crypto land right now is speculative, right? And the fact that, BlackRock and all that stuff you bought in and all that stuff, they could technically, manipulate the price down or up. Really depends. to me, there is a downturn coming, but I'm biased in that sense because, again, I looked at the other, cycle for Bitcoin. And again, whatever happens to Bitcoin is going to happen to Ethereum as well. So just remember that. And of course, the rest of the altcoin as well. Depends on what you're buying into. I'm sure the dynamic is a little bit slightly different than the previous cycle because there's so many blockchain out there that kind of mitigate or at least take the dominance away from Bitcoin, right? See this dominance right here? It's 52. Nope, I don't think you guys could see that one. 50. Hold on. Yeah, I don't think you could see it. Down here it says 51.3. That one is a Bitcoin dominance, right? That means that of all of the market cap of crypto, 51% of it is in Bitcoin. So what does that tells me? Tells me that Bitcoin is still kind of like in the lead. Yes, it's 1% more than the rest of the market, but it's still the top, crypto out there. Not to say that it won't flip at some point. Ethereum is one of them as well. But again, Ethereum has its problem, right? The infinite printing of Ethereum is there. Again, that mechanism of burning transaction or switching it to proof of stake was a good one because now it's deflationary. The supply is deflationary. But I think other altcoins is doing just as well. But again, it's a very highly speculated play here. So if you want to get into it, just make sure you know the risk to get into it. So as far as today, price action was kind of curious to see that the last hour I guess everything went down. Now I know the SPY is kind of like teeter up the top right here. It seems to go up more, but today trading though it's kind of concerning because it could be the double top right here, right? And of course the RSI is coming down as well. So from this right here up, and then you have down here. So that usually means a reversal is coming. How low is the reversal? We don't know. It could fall right here and then continue to go higher or not, right? It really depends. Now I was watching this one right here. Now I've shown this gentleman before, but I'm gonna kind of play it a little bit faster. And this is the company that I have in my title there. It's a supercomputer, right? Of course, CNBC was pumping it, Bloomberg was pumping it. But I'll show you later on though. But this is a news from the same company about 4 years ago. Here, let me just show you.
August 25th of 2020. And I remember back then, gold was going to 2,000 for the first time. It was loving life, making all that money in precious metals back then. SEC charges Supermicro and their former CFO in connection with widespread accounting violations. What? An AI company engaged in accounting shenanigans? Somebody pinch me. No, this couldn't be happening. These are all perfectly legitimate companies, and the demand is so big, and we're all in the tree with the nest and the trust. What? Nope. Just 4 years ago, guys, not even 4, 3.5 years ago, this happened. The Securities and Exchange Commission today, that was back in August of 2020, charged Supermicro Computer, a producer of computer servers, and its former CFO, Howard Hideshima, with prematurely recognizing revenue and understating expenses over a period of at least 3 years. According to the SEC's order, Supermicro executives, including Hideshima, pushed employees to maximize end-of-quarter revenue, yet failed to devise and maintain sufficient internal accounting controls to accurately record revenue. As a result, the orders find Supermicro improperly and prematurely recognized revenue. Want to repeat that one, guys. Supermicro improperly and prematurely recognized revenue. They pulled forward demand to make their growth seem better than it really was. In other words, accounting fraud, including by recognizing revenue on goods that were sent to warehouses but not yet delivered to customers, recognizing revenue on shipping goods to customers prior to customers even authorizing it. What? Just ship a package to our customer. Who cares if he bought it or not? Just book it as revenue. Send him a box and record it as revenue. Oh my God. Shipping misassembled goods to customers. The orders also find that Supermicro misused its cooperative marketing program, which entitles customers to reimbursement for a portion of cooperative marketing costs. I'll be honest with you, I don't really know what that means. According to the orders, Supermicro improperly reduced the liabilities accrued for the program in order to avoid recognizing a variety of expenses unrelated to marketing, including Christmas gifts and to store goods. According to the SEC's order against Hideshima, he was on notice of these and other similar practices, yet failed to properly address them. The SEC told him knock this crap off, and he kept doing it. The order also finds that Hideshima, who signed or approved filings with the commission that contained materially misstated financial statements, knowingly circumvented certain of Supermicro's internal accounting controls. Oh my God, these guys are crooks. Supermicro CEO Charles Lang, who is still their CEO today, by the way, while not charged with misconduct, is required to reimburse the company $2.1 million in stock profits that he received while the accounting errors were occurring pursuant to the clawback provisions of the Sarbanes-Oxley Act. And guys, I just have to throw in this wonderful provision at the end. Without admitting or denying the SEC's findings, Supermicro has agreed to cease and desist, and they're going to pay a $17.5 million penalty.
17.5. So there you go. So you have this stuff going on, and this is the guy, Charles Liang. Okay, let's see if this is the guy. Hold on.
Yes, I mean, as you know, we deliver the best generative AI platform in the world.
This is the guy, the same CEO that was found to be guilty of accounting fraud. Of course, it's not guilty because they agreed to pay the fines, right? And now this is the company that this platform, or at least Bloomberg, whatever, is promoting. Saying, oh, is this a buy? Oh, is this the overvaluation and all that stuff? And again, they knowingly doing this. And hey, I'm not saying they know about this, like the news media or whatever. But my point is that, they pump certain company that is riddled with accounting frauds and all that stuff. And again, this guy is known, found by the SEC 4 years ago about accounting fraud. And then you have these things happening in the market today, still being traded. And this is where the share price is, $80 million right there. The market cap is $44 billion. Revenue is $9, right? And again, look, this net income might not be true net income from that company. And so, because the CEO has a history of accounting fraud, okay? And so, yeah, it's ridiculous, right? I have puts. Okay, well, congratulations. But do you know about the accounting frauds that is happening? It's curious to me, Winthrop, because look at the revenue. Revenue's going up. Why do you have puts on this? I thought that's the only metric that you use to measure GameStop, right? Shouldn't you be buying this? So 3 years ago, they have this problem. Let's see, 3 years. Was it August something? Hold on, let me look back. August 25th, 2020. So something prior to that, I'm supposed, right? This. Okay. Right there. Let's look down. So of all of these net income, it comes from accounting fraud, right? So they would ship product to people not even confirmed by the people that they send the product to. They just ship it out and count that as a profit. Yeah. And again, like it's terrifyingly. So all of these, now I know, like they might change their way, but really, $700 billion, $600 billion. What makes you think that this is something tangible, right? I don't know. Like if you've shown that the CEO are doing accounting fraud to get to where they are, and was proven by the SEC, but of course they did a settlement, so they don't have to accept the guilty plea. But yeah, nobody go to jail for this, and they continue. I bet you anything, this is accounting fraud. Based on past performance anyway. But yet, the media out there, they're pumping it like crazy, right? Look, 3 stock launch. It's like AI craze. Yeah. Super frequency. Come on, baby girl. Okay.
It's a small company. I mean, maybe we should change the name to Super Macro. I mean, because the stock is not micro anymore, it's tiny. How much is the share count and just sort of the I don't want to say lack of liquidity, but it is a much smaller company. How does that play into this gigantic run that it's had? Because I've seen this kind of story before.
Yes, and I think you and I have been around to remember the hype cycles of the past 20-some years, the company name should be more of a super hype. When you look at where the company's positioned, they obviously have key partnership with NVIDIA, AMD, and even to some extent Intel. So early in the cycle, they are a key partner. But as the cycle gains momentum, the economic value add or lack of economic value add is going to impact. And we went through the same thing a couple of years ago in the cloud cycle of 2016 through 18. The company had significant growth trajectory and then was not able to recognize that. I think in this early part of the AI cycle, obviously investors want to identify key winners. I think the hype and expectation that as a company add capacity, that's going to translate to revenue growth is something that is not well understood, and it just has to play out.
Mehdi Husseini, it's great of you to join us. Thank you. Again, price target at 250. Brian.
All right, so now the other side of that stock story. This SMCI bull has been following Supermicro for a long time, and he has had a buy rating on the stock for nearly 5 years, going back to February of 2019, and shares were under $20. So obviously this has been a great call if you listen to Nehal Chokshi, who joins us now, Managing Director of Infrastructure and Application Software at Northland Security. Nehal, first off, great call. And you can respond to what the previous guest just said, but what did you see in Supermicro that apparently a lot of other people missed?
Yeah, great. Thank you for having me on this show. I guess, first of all, the thing that I've seen in Supermicro is a decades-long durable differentiation in that they own the motherboard design, the power supply design, chassis design. That enables to give customers superior power efficiency at volume price economics.
I don't know. I'm skeptical. But anyway, so this is the only way I kind of believe that. I'm sure, that guy's probably got clued in. It's like, hey. Or they just find some random guy who used to talk positive about this company 10 years ago, and there you go, right? Or a couple of years ago when the share price was $20, right? Again, like, when people are pushed right in front of you like this and try to pump it up, and the stock price was like, what, $600 at the time when they put that guy in front of you, it's to pump it up like this. So the stock price was around here, right? Yeah, in 5 days, man. It's ridiculous. Right there. And what is the float again? The float is 50 million shares. Okay. 55 million shares outstanding. And there you go. let's see, what's the forecast here? There you go. Nine analysts is given a price point, at least like strong buy, Barclays strong buy, buy. Of course. Wells Fargo, Wedbush, home, right? So I mean, again, like I'm biased in this sense, right? Because when I see Wedbush telling you to do something, I'm kind of like, you should do the opposite, right? Is that why you're having a put on this company, Winthrop? Yes, I know that was. That's why I hate this little heart thing. That's why I bought put. If Jimmy CEO did that, he would be arrested the same day. Of course, like, it's ridiculous. Now, I know that the SEC doesn't have any criminal, what is it called? Arms of enforcement, because they're meant to be civil enforcement. But they could report this type of thing to the DOJ. And the thing is, like, they should have, right? They should have. But they don't. And now this company is able to be traded, whether right or wrong, with the same CEO, with the same CFO, still in the job. And so I don't know, again, like, I'm speculating on this part, this past 3 years. They could change their way, but I don't trust that at all, right? When people are kind of left to their own device and have a way out. Let's say, hey, if I got caught once and they got let go, and all you have to do is just pay the fine, why not do the same thing? So instead of accounting for instead of saying that we're making $13 million, let's do a $600 million instead. $600 million, 200, 100. Now, on the news there, they were saying, well, they partner up with NVIDIA and all that stuff, and I don't know how much that is true. For people who invest in this company, I would have a lot of question for that. I mean, not $9 billion revenue growth. I don't know. Again, like, they might be pumping each other up because NVIDIA is kind of like overvalued as well. So that's another bubble to be kind of careful of. Who knows, right? That's just my thought here. Let's see. Let's listen to some more of this here.
While not charged with misconduct, is required to reimburse the company $2.1 million in stock profits that he received while the asked the same question of the NVIDIA bros about NVIDIA, because something almost identical happened in the year 2000 with NVIDIA and their former CFO, Christine Hobart. Does the CEO of Supermicro Computer, is he the kind of guy who doesn't notice that his CFO materially misstates revenues and is engaged in all these practices to overinflate his stock price? Is he an imbecile who doesn't realize that's going on? Or does he know it's going on and not do anything to stop it? One of these two situations has to be true. Is he an imbecile or a crook? Either way, he's still in charge. So an imbecile or a crook is running things at SMCI. One of those two things has to be true, guys. And it's the same thing with NVIDIA, because their CFO did something nearly identical in 2000, and Jensen Huang was still the CEO of that company back in 2000 when that happened.
So, yeah, NVIDIA as well. So the fact that supercomputer here, this company, is somehow related to NVIDIA. So again, that's why I'm thinking like they're pumping each other out or pumping each other up, stock value, the hype, and all of that stuff. Yeah, I wouldn't want to touch this at all, but I just thought to tell everybody here about this news I've got. Okay, so hi Sean, thank you for joining. offer forward guidance? I guess so, but look, this is the
The
forward
stock has been on a
guidance.
wild ride. Is your company fairly valued?
Yes, I mean, as you know, we deliver the best generative AI platform in the world, especially in terms of time to market. Whenever new technology is available, we are able to deliver new product to the market. And we deliver product in system level or rack scale. We call a rack plug and play. When customers receive our rack, they are ready to be online. Just plug in two cable, data cable and power cable, and then they are ready to be online. So customers like our good quality, time to market, and ready to run advantage.
So I'm biased towards the CEO already because of that previous segment, right? Because he was found by the SEC being, doing fraudulent. Well, not him, but his CFO that is still in charge till today. But he was in charge then when the fraud happened, right? And so that's why that gentleman was saying, like, is either he's a crook or a very uninformed CEO, like unaware of what's going on in his company, right? So either way, it's a terrible company to own, in my opinion, leadership and all that stuff. Whether he's giving forward guidance or not, I don't care, right? If he's a crook, forward guidance wouldn't be, sufficient anyway, because it's grounded in, kind of like a falsehood type thing, right? And then, of course, like relating to NVIDIA, which does the same thing, somewhat similar thing. Remember it was a couple quarters ago, they were recognizing certain orders as complete when it hasn't been shipped out to the customer yet. And 10% of that they were said on the earnings report that 10% or more than 10% of this particular revenue comes from a, what was the term that they used? I should have looked for that one. But go look for, go look at the earnings report couple quarters ago. So my point is that there are crooks together. Well, allegedly, right? They have to pay a fine for not admitting the guilt. And so this is how the game is played. I'm sure because they play in the same club, they're making the same money. Look at this, right? Who wouldn't be happy making this type of money, right? Of course. And people are pumping this left and right, saying it's the greatest thing ever. NVIDIA 2.0, right? And then you have this guy, Sam Altman guy here, is claiming that he's going to make a, what is it, like a capital thing? $7 trillion. $7 trillion. He's going to make a $7 trillion company from AI. I don't know. I don't know if I could believe that. But hey, anything could happen in this world, right? But GameStop being the best company ever? No. That's not allowed because GameStop doesn't scam people. Ay. Where is this world coming to, right? But of course, like anything like this where, the bubble, that's why they call it a bubble. Just like crypto was a bubble at one point. Although, it's still $1 trillion market cap here for the whole crypto space. And then now you have NVIDIA and, AI company going berserk right now. And so is this like the signal of the end time is near? I don't know. Again, I don't know when it's going to pop, but it will. It will at some point. And so I'm waiting for it. Of course, like there's a lot of prediction out there that the SPY is going to come crashing down at some point. By who? By a lot of people, right? Is this sustainable? I don't know. And then on top of that, you have Treasury market going berserk. apparently there's a talk of $10 trillion treasury being sold or is about to be sold in the next year or so, right, by Janet Yellen. And $10 trillion, think about that, you guys. Like, it's ridiculous, the amount of money that is being printed, or I guess like being sold as debt, so that we could pay it back as in taxes. And on top of that, you have people who couldn't even afford to live, to eat, to even do anything for the economy. So even if you want to spend money to stimulate the economy, you can't either. And so what can you do? What can you do? I feel like I'm kind of rambling off tangent here. Okay, so of course, like the inflation, the CPI came out kind of a little bit higher than expected. So when people are saying, oh, March rate cut is going to come 7 times, that's not going to happen, right? Well, unless, the Fed sees something. But if they were to lower the rate, that might be the signal to be like, hey, everything is breaking down. So that's not a good thing. Even though, like, people are, But initially, it's going to elicit, like, this feeling of, like, hey, everything is fine or whatever. But eventually, the valuation is going to catch up to whatever companies that you're investing in. And so, to me, if you have a company that has no corporate debt, have a long runway and all that stuff, I think that's the best company to be in. In my opinion, it's GameStop, right? Because, again, hey, discretionary spending is the only thing that I'm kind of worried about because, again, games and all that stuff. But, hey, when people don't have the money to go out, what do? They play games at home. And so it's not that's just my logic, right? Of course, it could be wrong. If you spend, let's say, $50 on a game, you could like have hours of fun, like hundreds of hours of fun, and you probably could play with your family too, with your friends and all that stuff, and make it a date out of it, right? So those are things to look forward to. Even though in recession time, I think GameStop would do pretty well. And on top of that too, we're selling refurbished stuff, right? And so, hold on, let me see if I could show you guys. And this is like the best time to do that. And people are like, they're selling used game and console. It's like, well, in a recessionary environment, when people don't have money to buy new stuff, this is the best opportunity. It's like if you don't see the money there, it's like people think that, oh, this is trash, like they're selling used stuff. Well, if you know how to turn trash into treasure, this is the best, right? And I think leadership could do it. Pre-owned, of course, there you go. Yeah, you could save a couple bucks here to do that. PlayStation 5, if you want a pre-owned one, there you go. How much you're saving? I don't know. There you go. If you're a pro member, you get to save more too. So that's just my logic here. I think, again, the fact that they have no debt, that's another good thing. I think a small recession will come in the summer. I guess more gaming at home. Yes, of course. I think people are already kind of like feeling that so you're not able to buy as much anymore, right? Even though your wage is a little bit higher, I don't feel it, I'm fortunate enough that my expenses really low. I think I told you guys that before. And I'm not one to kind of like spend frivolously on stupid shit that I don't need, right? I made it a point, At one point in my life, I only buy it's like one shoes in 3 years, right? One pairs of shoes in 3 years. And I think I went like 2 years without buying any clothes at all. Because I feel like I have so much clothes throughout my life, you know. I don't really need any more. Like new stuff and all that stuff. So again, like I'm fortunate in that sense. But I'm sure people who are very, like their habit of spending is a lot more than me, they probably would feel that. It's like, you know, anytime they go out and eat and all that stuff, I've noticed like the bills is a lot higher. You know, from time to time I do splurge on, you know, going out with friends. But again, like it's kind of like once in a blue moon type thing. So I guess depends on who you go out with, right? So I remember like paying $20, you know, a couple years back before COVID, for my meal, like whatever I eat, you know, I usually just $20, right? Now it's like 32. 32, 33 plus tip, it's probably more like $40. So it's ridiculous. Yeah. Let's see. Winthrop, if that was true, Cell wouldn't be declining. Cell wouldn't be declining? What do you mean? It's like, you know, there's so many different way to look at that, Winthrop, you know. Now, are you saying that if the remember they closed down European stuff, right? Storefronts and all that stuff, and so, you know, those foot traffic didn't gone too much. But if you think about cell decline, let's look it up real quick, right? When you say cells declining so much, I don't know if you notice it's only 4%. Something aligned with Walmart revenue. Let's look at it real quick. Since I don't have it memorized by heart. I should. Okay, so when you're saying stuff like that, Winthrop, you know, you make it seem like, oh my God, it's tens and thousands of percents down. It's like, do you realize it's only, look, from here to here, it's 1%. This is in line with retail, retail spending, right? If you look at the economic right here, let's see. The data, right? Consumer spending or something. Hold on, let me try to find it for you. Forecast. Man. GDP? Maybe an overall? There's a section there. It's called retail sell, month to month. Okay? It aligns with this. Right? Excuse me. And this is month to month. Right? Last month it's probably declined a little bit more. Now I don't have the, you know, the previous history. Right? But I bet you anything, if you trace that history back, retail sales went down. Right? Now, if you want to compare that to Best Buy, right? Let's compare that to Best Buy real quick. BY. Here we go. You see this? how much more in percentage are they down? And this is again electronics and all that stuff, right? So in comparison, GameStop doesn't deplete that much in revenue, right? If you don't see that, I don't know what to tell you. You see what I mean? This is trailing 12, okay? Trailing 12 on both of them. You see how much decline there is? 4%, okay, 1%, 5%, okay, it's a little steep, okay, but look, this one, 4%, 4%, right? Compared to what? Compared to 5, 8, 10, 11, 9, right? So why don't you shout out to the rooftop, Best Buy is the worst company to invest in because their revenue is down. It's like, really? And so, I don't know, like every time you bring that up, it just seems a bit, I don't know, staged? No? Can I say that? Okay. I just bought a new headset from Best Buy. Okay, great for you. I took I looked at the preamble, okay, DRS video, and I think the almost 2 hours couldn't be done in, could be done in 30 minutes. But usually I speed them up, like, 0.1 or 0.75 speed. Yeah, I agree with that, but sometimes it's just hard to kind of condense those type of information in such a short period of time. It's really hard when you do contents like that, and sometimes if you like take something away, it might not seem right to do so, because people spend time to talk to you for 2 hours. So I don't know, I'm sure it's probably some decision there, being kind of considered people time and effort. So I think it's good to kind of at least include those 2 hours. But I appreciate you checking those out. I hope you learned something though. My shares are indeed pure DRS, as they were saying. Book registration with no reinvestment plan. Okay. Yeah, I'm not well versed in that at all, and my shares are not DRS, so I don't know. Again, I feel like there's enough people who are in the DRS train already, and I'm kind of lazy to kind of figure out that end of things. But yeah, better warranty. I feel like they save the quote unquoted quote correct way to do DRS at the end of part 2. Okay, I think I'm not. Can I DRS my new headset? I want it in my name, Sean. Come on, Windrop Diamond. Send me $50 again. So, okay, sell decline when you close stores. Yeah, that's another thing too. I mean, they closed a couple stores. I mean, they didn't close that much, in the grand scheme of things. Marantz did cover that parts too. If you were to look in the North America, or like in America, stores hardly was closed. Maybe a couple states they were, more so than others. Maybe 5 stores is closed in certain state, like in California or something like that. But in Alabama, I don't know why I said it like that. But in Alabama, they only closed 1 store, right? And so, it depends on where you are. But even then, most stores in America are still open. The stores that were closed were in Europe and all that stuff, right? And of course, I think that's smart strategy, because if you were to look at the last earning report, American stores were actually profit, right? If you look at that real quick here. It's like the store breakdown of the balance sheets. What the hell? No. Current report, quarterly earnings, loss. Let's take a look at it together here. Cash on hand. I'm looking for the breakdown on the Europeans and all that stuff. Did they even say it here? Shares outstanding. Right here. So sales, net sell, operational loss. Oh, European was making money. Okay. Consolidated. This is a 3 months. And so this is the previous year, right? Previously, they were losing in America $83 million right there. But this current year, the most recent one, which is right here, we only lose $9 million there. So, okay. I think I misread that one. Maybe it's the quarter previously that I read it wrong. Okay, this is a 9-month loss. So operating loss, $30 million right there. And this is a 9-month. So this is 9 months, okay? So in 9 months, they were losing $300 million. Then, this previous year, most recent year, they only lose $30 million. So you see what is the swing there? That's a swing of $200 million. Swing. $270 million. Swing. In the plus side. So if you see that trend right there, of course, you could speculate what is going to be 2024. Sorry, 2024. You have 9 more quarters to go to kind of determine that, right? But if you could see that trend, if the trend, if you could see the trend of revenue going down and down some more, right? You're expecting revenue is going to be down, then you should be expecting the trend of net sale going up. And so, right, it's only fair that you could do that. If you just, revenue's down, therefore shitty company, okay, right? You don't see the other trend here that you might miss right there. Okay, so net loss, $3 million right there, accounting for other stuff with it. Okay, this is 9 months. So in 9 months, they are losing this much. In 12 months, they lose. In 3 months, sorry. In 3 months, 3 million. 9 months, 56 million. Okay, net sale right here. I think it looks good. Looks good. Anyway. What do you think? Wait. Ooh, that's Sales decline when you, okay. The most pointless shit ever is, it serves some purpose, right? Yeah, so you can't short the stock, right? Yeah. Why do you think a shrinking company deserves a higher valuation? You assuming that they're shrinking. Like, what metric do you use to think that they're shrinking? Right? Rather than, that term that you're using, it's almost like no matter what GameStop's gonna do from now on, they're gonna be shrinking forever until the end of time, right? That's your perspective. My perspective is that they're doing the right thing. They're gearing themselves up for success, right? Without over leveraging themselves. So what you are thinking shrinking to you is them deleveraging themselves from 10 years ago, right? From bad leadership that was previously, that GameStop, that Ryan Cohen inherited from, right? It's much like this. Like, let's say you are given a presidency of the United States right now, right? With debt looming. Can you fix it within 3 years, Winthrop? If I give you the presidency right now, like in what, 8 months, I will elect you to be president. How would you fix this mess? Right? It would take you some time. I hope to God that you would know how, to fix the country with this looming debt. Right? So it takes some time to do that. Yes, it's possible, but it's not gonna, some people are not gonna like it because you're gonna cut a whole bunch of stuff. Right? And so the fact that Ryan Cohen is able to do this in this company, it's kudos to him, and he has the knowledge to do it. And he show you based on, show me anyway, in my opinion, the balance sheet speaks to me, right? That he's been doing it successfully. Now, you might think it's shrinking, but I'm thinking, hey, maybe you just need a different perspective here. Right? And so if you evaluate it, like if you think it's shrinking and it doesn't deserve a higher valuation, you just wait and see. Wait 5 years, wait 10 years, and then you'll see what this is going to be. But by that time, it might be too late for you, right? So, again, continue to short that company. If you think it's a shitty company, short it, please. If you realize it was the DTCC was the one that told the broker to pause the buy button until they found enough collateral, you would want your shares out of the DTCC. Okay. When people go bankrupt, there is a pecking order on who get the money first. I'm making sure I'm before the flow of the money that goes to the broker. Okay. Losing less is bullish. Huh? Yes. Because it's a different trend. It's on a new trend. When they're losing more and now they're losing less, that's a good trend to be in. Yeah, it's not quite there yet, but yes, that's bullish. The only one losing is you, Winthrop. Why Winthrop? Okay, Jay. Let's give him a little bit more dignity, right? He's gonna need it. But I appreciate you coming in, Jay. Fact is, GameStop has turned around as well as pivot into more business and models and is now profitable through smart business practices efficiently, period. You are flat out wrong. Very good. Diminishing return. You keep saying that. It's like it's almost like a script that you have in your mind. It's like shrinking company, diminishing returns, and all that stuff. Like, what diminishing return? What is the definition of diminishing return, Winthrop? Are you just speaking from the price point here? Okay, if you think it's the price point, all right. You might get a point here, but I'm not talking about the price of the stock itself. I'm talking about the company right here, right? Dollar for dollar. How is this diminishing return when they used to lose so much more than they're losing now, right? And the trend is going up and up. Right? I mean, I don't understand your logic sometimes, but, you should be buying into that supercomputer company. Like, their revenue's up by 30%. Why are you buying puts on that company? By that logic alone. Look at this. Look at this revenue. You should be buying into it. Ay. Profit, no debt, endless free cash flow. Here is what truly moving, the moves that you need. Jay is correct. It's impressive the way Ryan Cohen has done this turnaround, along with operating efficiently to get through supply chain issue and turbulence economy. Yep. If this earnings season show us anything, the companies not offering forward guidance are getting crushed. Okay, what is this with forward guidance? Like, you guys, really? Is this like the way that these people are investing? I don't know what group you're in, Winthrop. I feel like there's a different investor here. I'm a different type of investor. Perhaps you might think that I'm naive and all that stuff. Okay, you could think that. I mean, you might not be wrong there. But again, like, forward guidance doesn't do anything. For me, anyway. I'm going to speak for myself here. And I'm sure, people who are watching me the same way, I'm sure they're going to think about the same along the line of thinking. And that's why we're here. And this is why you don't understand why we're in this company, why we think that this company is so valuable. It's because the type of the leadership that we like, right? The kinds of Ryan Cohen, right? We love it. We love it when he's not giving forward guidance. And Moran's I agree with most of what Moran's was saying about it. I would be repeating it, but, I'm sure you've heard about that side of the story as well. But again, like the forward guidance things, I don't know how that would help people. It might help the media try to pump something up to you, back in Chewy time. And this is why I'm so baffled at what people are. It's kind of the hypocritical type thing, or the biasy that comes along with that, right? They said that Chewy wasn't profitable when it went public, right? It wasn't until PetSmart bought into it that it becomes a little bit profitable. But even then, it's like razor thin margin. And it was like, okay, if it wasn't profitable, why did the new pump it? Why did the new promoting it as if it's like the best, company ever? And there's a reason why, right? And so, shouldn't they turn it profitable first before pumping it to the public? No, the reason why they pump it up, or they give the forward guidance or whatever, brought Ryan Cohen in for the interview, is to promote it to retail investor, right? So the forward guidance is for that. It's just to, scam people. It's like, hey, you could make more money. The business doesn't make money right now, but in the future, you might make money. See what I mean? So again, GameStop is about to post a profitable quarter here in a minute, and people are still, oh, it's a shrinking company. Oh, revenue is down. Really? That's all you could see? All right. Let's play that game. How long can you say that? How long can you say that this company is a shitty company when they make billions of dollars at some point in the future? And if they make billions of dollars in the next 10 years, you're gonna be like, oh, there's no forward guidance. Oh no, they make $500 million last year. Oh, there's no forward guidance, so therefore terrible company, right? How long can you play that game? What if the next 5 years they're gonna have $5 billion in cash? What then, right? Hey, a girl could dream, right? So if they could pull it off and make maybe $600 million a year, how about that? Even that is not far-fetched either, because with the inflation, like, think about it. At some point, you're gonna have to pay $20 per Big Mac meal. Right? It's coming. So maybe in the next 2 years or so, you're gonna see $20 for Big Mac meal. Right? You already see $18 being sprung, right? And so, how low can this stock go? I don't know. I mean, think about it. In 10 years, do you think you could buy GameStop at $20 or $14? I don't wanna bet that, you know. And so that's just my thought here, you know. Revenue means nothing. It's business. Business isn't using smart practice. If business doesn't use smart practice, it become more profitable per store and overall e-commerce. Welcome to the chat room. Thank you. No guidance. Get over it. I know, right? Not telling enemy what they're doing. Enemy, they narrow-minded people never understand the truth. Well, you neither growing, staying flat, or shrinking. You either growing, staying flat, or shrinking. Okay, well, I mean, it's a business cycle, no? Right? They're just turning around this impossible. I think you know how like people said that it's like I'm trying to find a different analogy so that people really understand what I'm trying to say here. You know, let's say somebody just give you a bond of yarn to untangle, right? And just throw it at you. Hey, untangle this for me, or put it back in order, right? It takes you some time to untangle that yarn, that ball of yarn, because it was a cluster, you know, mess of things, right? You can't just immediately, hey, let's just fix this and with the snap of fingers, right? Because like real life work, you have to actually, you know, go out there and do the actual work to, okay, let me look at this ball of yarns to see where's the end, right, of things, and then you just unravel it slowly, because if you do it too quick, you might not be untangle it correctly, right? So that's what my thought about, you know, Ryan Cohen has been doing for 3 years, right? And of course, Matthew Furlong was along with the ride as well. And so, you know, it takes some time to get that just right. And now you have the result of this. And so what you might think is shrinking is them doing that. You know, yeah, sometimes you might have to chip, you know, some of the yarn away in order to, you know, get to the next level, because, you know, the level of entanglement is just so that challenging that it takes more time to untangle it, right? That doesn't mean that the progress that you have made so far untangling that yarn, it's so it's unnoticeable. It's noticeable, but it just needs some more work to do. And so maybe another quarter they're going to be able to do this, but I think they're at the end of that right now, where you could see a smooth sailing from here, where they're going to fix the company the way that they want to be run, and it will be better. I hope that makes sense. There would be those shorting GameStop, those hoping for GameStop downfall. They're not. The one that sells short. 3 years is a lifetime in the Okay, well, that's on you. Okay, a lifetime in the financial sector. Well, it takes time to build things that last for decades on end. It's okay, if you're investing in 3 years, a lifetime, then go die. That's all you have. That's the lifespan that you got. 3 years of investment, and there you go. Come on, it's go talk to Warren Buffett. It's did he invest in Coca-Cola for only 3 years? And then, it's a lifetime for me. I'm done with this company. Come on. It's are we 5? Do we not know what's going on in the world? Man, it's this is a short-term thinking, short mind, the mindset of a short seller. This is what they are. And it's a very short-term thinking, because they want that money right away. They don't care about, the people that are building things. Because when you destroy things, it takes you just a split second, right? And this is the type of people that we don't want in society, I'm not saying short seller is not vital to society. I'm just saying some short sellers shouldn't be allowed to be if you do it legally, and ethically, that's fine. Nvidia, for example. Okay, go ahead, short Nvidia. What do I care about Nvidia being $1 trillion company right now, right? That they don't deserve to be. And so there you go. Do you think Nvidia deserved to be $1 trillion company? That's on you, right? You're saying, why would GameStop be deserving of a higher valuation? Well, every company deserves of something. If Nvidia could be evaluated at a high valuation, astronomically, why can't GameStop be evaluated at a higher price than this? Come on. It's it's relative, no? In my opinion, anyway. Also, eventually, revenue can go up. 2, plus it can be more profitable as a holding company and selling never branded products, as well as players, more subscription, more tournaments, live stream. Yeah, I mean, there's countless of things that we could do, right? But again, before we do that, we need to clean up the balance sheets, and we did that. And Ryan Cohen and the team has been doing that for 3 years. So again, it takes some time to untangle that yarn, but when we're done with it, the sky is the limit type thing, right? So we could do everything or anything. So it's just again, the limitation comes from the limitation that other people place on GameStop here. GameStop cannot be stopped in a sense, because again, with $1 billion, that's a lot of money, right? And I was thinking about that too. It's man, what if they're, how those commercial real estate being evaluated at a steep price discount? I was thinking, what if we just throw $100 million on one of those buildings and just make it a tiny mall or something like that? But anyway, I'm just like thinking about that. But yeah, those are a good asset to own, commercial real estate. When all of that going to shit, so to speak, right? Yeah, and then it's coming. I think, the downturn is here. Not only that, the companies that we're going to buy into, or at least see the value of, privately owned company that is not publicly traded, so that it's most likely less likely to be attacked by the same people that attacked GameStop. So yeah, there's revenue out there to be had, and it's multi-billion-dollar industry here. Sorry, my dog is kind of noisy. Okay. The world doesn't need what GME offer. You can buy their product at 5 other stores. Okay, that's your opinion. Talk to the people that spend $5.7 billion a year with GameStop, right there. So the data doesn't support that from you, and so we'll see if they could get that market share back from that 5 other stores that you're talking about. That 5 other stores, I bet you anything they're gonna lose. They're gonna lose at some point. That's what competition is all about, right? So you just need to wait a little bit. They are not unique whatsoever. Okay, that's on you. Winthrop, Bye Bye Baby Share has something in common with GME. There are 0 real shares available. I'm not dumb enough to buy. Okay, in the first place. Good try. Whiny GME investor. Okay, venture. There are millions of businesses around the whole world. People shop everywhere. They choose or want to. It doesn't matter if the business is successful, period. That's another thing too, is like to say that, hey, nobody wants GameStop product and all that stuff. That's bogus, right? And new people born every day, and of course, like, if you treat them, the customer, with respect, with discount, and again, like I've covered this before, where when GameStop tells you there is a discount, it's a real discount. It's not like an inflated price already and then they discount it. It's like it used to be $40, and some stores, they would say, hey, this is the original price. Instead of $40, they would say $100 original price, and now you get the sale is $40, right? But all along, $40 has always been the price, even before the discount. I hope you understand what I'm saying. Is that the value added coming from being a pro member and all that stuff? That's gonna take some time to kind of attract those customers to GameStop. And to say that you might not wanting to shop there, Winthrop, because that's what you think, whether you're biased towards GameStop in some way, shape, or form, maybe because you want this company to go under, right? But for people who are actually going to shop in this store, they're gonna do it. And then now they could do it online, much quicker, much more efficient at searching items that they want right away, same day deliver type thing. And then now, you could do headset, you could do, gift cards, toys and all that stuff, collectibles, everything, right? digital games right there. If you want to download it digitally, there you go. GameStop has it too. And so, yeah, these things are valuable to the company. And for you to say nobody shopped there, well, keep saying that and see how true it's going to be. You're right. Only a legit company would offer their shareholder guidance. Okay. You are short yourself. Jimmy is massively overvalued. Jimmy is extremely undervalued. It's higher now compared to when they made money and paid a dividend. They will do that again, Winthrop. Come on, like, what the heck? They will be fine. And you'll sing a different tune in about maybe 2 years. Don't worry, those things that you're asking for, not guidance. I bet you anything that he's not going to give you guidance, but the balance sheet's going to show you. And so, yeah, don't worry about it, right? You know, you think it's overvalued? Okay, all right, short it. $2 trillion Nvidia. I know, right? Wonder how many shares of Nvidia have actually. Now they are trying to target price. I know, yeah, I just saw that. Nvidia. Their forward guidance is to have you believe that the company is worth $2 trillion. It's ridiculous, right? They make a product. So, does the product makes you fly as a human being? It's like, what? You know, those forward guidance that you're asking for, it's just CEO fluffing. Overpromise, underdeliver. Do you understand what that means? It means that you're just buying into the higher and higher valuation so that the people up top could exit with the liquidity. It's called exit liquidity. Look it up. GameStop doesn't make product yet, but they can. Just wait. Then intentionally try to lie, fraud, and destroy what they are. Shorts and bankrupt all of the profit and zero taxes. Yeah, I mean, people, again, like those companies that has forward guidance and all that stuff, most of them are fraud themselves too. Like, you know, I just showed you about the NVIDIA and the supercomputer company. They are cutting from the same cloth because they use the same tactic in accounting fraud, right? And nobody go to jail for it. They just have to pay fines. Look at the balance sheets. When Thor, if you just told you what we made. Yes, Gamestop make on their own product and customer exclusive. Now wake up and find the truth. Hi Manuel, thank you. They slap their logo on stuff and then branded product and then mouse. What, don't every freaking company do that? The same way with Amazon, dude. It's like, what the hell? You think Amazon actually have a factory? Like when they have the Amazon labeled goods and products? It's like ridiculous. It's almost like you're blind to what is good in GameStop, or you're trained to come at GameStop at this light. And again, I know, like, again, if you hate GameStop, I cannot convince you otherwise. I really can't, you know. Just like I love GameStop, right? You can't convince me otherwise. But I'm open to all of the suggestion that you're saying. But every single thing that you're saying, it's just, again, a matter of perspective here. Perhaps we have different perspective, and I see it differently than you. I think you're wrong, so wrong that I don't know, like, where you get the information from, right? How long have you been in the market, Winthrop? Like, if you don't mind me asking this, because I'm curious myself, you know. And what do you do for a living? Are you a trader? Are you an option trader? Are you an equity trader? Are you an investor? What are you? Because that will give me a little bit more perspective on this. You know, I'm leaning towards a decade investor, just like Moran's, right? Just like Warren Buffett, just like Ryan Cohen. I feel like, you know, he's in something for a long term, you know, and he's in GameStop for a reason, because he sees the value in this, and he think he could, you know, turn this company around. So if you could tell me, you know, that would be amazing. But anyway, okay, let me you got your kids into the cult already. Nice. Okay. New gamer will not stop being born every single day. You people pick a fight with a gamer. Yeah. That line is tired. Okay. Is GameStop pricing going to single digit like the analysts predicted? I don't know, Manuel. Hey, I'm here for it. If it's single digit, more share for me to accumulate. That's just how I looked at it. Again, people could misprice things for decades on end, right? I'm looking at, you know, Amazon at $1 at some point, right? People are kind of sheeple in a sense, right? If they see, you know, people jumping on the stock, they're gonna jump on it. Retail and the like, institution and the like. But, you know, we all know that BlackRock's been buying into it, right? Vanguard's been buying into it. Perhaps they're buying into it in order to lend the share out to make money more. Who knows? But I don't care. Again, single digit doesn't scare me. Really, it doesn't. Because again, I'm a decade shareholder. I want to hold this company until my thesis is correct, right? Or until I'm proving otherwise. That Ryan Cohen is a piece of shit. That Ryan Cohen doesn't know what he's doing, right? That the company doesn't make money. That the company burns more money. That the company will burn that cash on hand that they have, $1.2 billion, right? So long as those things are still in place, why would I sell the stock? And if it's single digit, great. More shares for me, right? Again, I don't need the money at all right now. It's stashed in my Roth IRA. I have 30 years of my life to collect those. So, yeah. Does Best Buy have full store employee quitting at one? What quitting? Like, what are you talking about? You see, like, you're spewing out bullshit at this point. Like, there's nobody's quitting the company. GameStop has already won, is winning, and going to win, period. Yep. I haven't been to Best Buy in years. I buy mostly on Amazon or Walmart Plus. Okay, that's good. You should switch to GameStop at some point because they might have a better deal than Amazon. I checked it out already. Some items they do have higher price, but some items they have lower price than Amazon. So, and that's another added value too. It's like, if you look at, certain items, you might find a deal here that Amazon doesn't offer, right? And again, this is where, the competition comes in. And then if you have a pro membership, you could sign up less than what Amazon Prime would charge you. Yeah, there's so many different ways. But hey, if you don't want to support the company because you hate GameStop for whatever reason, that's on you. True fundamental ringing hard enough will blow them out, force short either out of the stock forever, or make them longs and reverse their. Yeah. Maybe I'll see the bull case in 2 years. Okay. Well, wait. Don't be laughing. You'll be buying GameStop at $100, I bet, because you're FOMOing into it. Bear should never take away the buy. You create a monster. Don't do the right things and make a compromise, gaining back from long offset shorts, or soon you will no longer be. It's hard to read that. Or soon will no longer be any other way but to be eaten by the shark. Okay. That's a hard thing to read there. Okay, Games CEO sending out letter. Surviving. You still on that letter? Are you kidding me? Come on. The letter that you're talking about is actually a signal that he's gonna be here for the long haul. Don't you get that? And so he's gonna be here until he succeeds. And so if you have people like that in your corner, you want to support that type of people. You want that person in your corner. Just like, I hope you pick your loved one based on that. Because if you don't, that's your loss. Now, if you think this is the type of CEO that you don't want in your corner, that's on you, right? Go ahead, go buy NVIDIA right now, right? Because they give you forward guidance, right? Go buy NVIDIA. Don't short it, buy it. $2 trillion company coming in your way. Go ahead. You might make 30% on your money. Putting money on NVIDIA right now at this high price. You are my favorite. Not sure who's that. The speech impediment guy. That trollers. Come on, you guys. Okay, his letter was about changing business to profitability, but because shorts, endless crime against them, making a business profitable while providing services is the whole point of a business. He did it. Yep. Gamestop. That thing you think is crime is a normal part of the market. Okay, sure. GameStop won in 2001 until they didn't. Okay. See, okay, there you go. That just show me that you are a trader. You're not an investor in this company. No wonder you're just bashing here now. It's like the diminishing return. Okay, diminishing return for you as a trader, right? You might be winning right now because the price is down. Okay. How long are you going to be winning this? How long are you going to sing this tune that GameStop is somehow a terrible company? So, only crime is not making money in a bull market. Okay. Hey, some people, again, that is a perspective of traders, right? Who could time the market that well, right? Unless you're inside trader, right? Unless you're following the news every single day, right? Most of the stock out there are not based on fundamental. I'm sorry to say that to you. And if you don't think that, I know institutions are pumping other stock left and right based on nothing at all. And so if you're falling for that, I'm sorry for you, right? Yeah, you might make some money in there. Like bull market, right? You think this is the bull market? Okay. That's on you. I don't think it is. I think it's just inflating, the price pumping, to try to get more people trapped into the top. And there you go. They're able to exit those liquidity. The leadership has been selling left and right. You've heard about Amazon, Jeff Bezos selling, right? You've heard about that, right? So how is this a bull market? And what did the news says? Oh, just don't worry about it, this is a normal way. It's like it doesn't mean anything. Doesn't mean that you have to sell it too. Just because Jeff Bezos sell $2 billion worth of shares, that's nothing there, right? It's ridiculous. Come on. That term again, when jump shit cold, really? Okay, good on you. See, that's why. Again, you're a swing trader. You're trading this in and out. I'm an investor. Again, like I hold this company for decades. Okay, so no wonder this is the perspective. We have different perspective here, and so that's why, like, I'm no longer gonna waste any time on those comments here, because again, it's back and forth. We're cutting from two different cloth here. Okay. So no wonder we don't see eye to eye. And when I'm referring to the company, you're referring to the stock price. So it's totally different things here. And you think it's shitco because it's a stock price coming down? Well, because you're just a trader. You're trading this, right? You used to seeing it at $100 a share. Now it's $14. Therefore, in your mind, it's a shitco, right? It's a shitty company to be in. Okay, that's on you. Alright guys, it seems like there's a stir about in my room here. I'm gonna end here in a minute. I know you guys are... Okay, GameStop is profitable fourth quarter as well as profitable entire 23. Now they will be profitable moving into the fourth 24, as well as billions of dollars in the bank. Free cash flow positive and zero long-term debt. Yeah, I mean that's all you need to know. Like, if this is the what is it, the comment of the day right here. This is the bottom line, right? And so there's no price actions and all that stuff. Okay, all right, more share for me, right? It's hard to beat the market. I am index investor. Okay. I have small portfolio for speculation. Okay, I respect that. Hey, I have my long-term, short-term, and a portfolio that I do option with. So that option portion is very small compared to my other two. But you have to develop your own strategy if you wanted to kind of beat the market and all that stuff, right? And of course, like I have my other one where it's like my work stuff, 401k stuff. So, I have different pots in this game here. But as far as my Roth, it's all it's all in GME right now. And so again, that's a huge gamble for me, right? Quote unquote. I didn't think so. I don't think so, because this company is valuable to me, right? Because leadership is valuable. And this is why I'm in here. Because, if it wasn't for Ryan Cohen, I wouldn't be in here, right? If it wasn't for the vision that Ryan Cohen kind of put forth on the letter that he wrote to the board of director 3 years ago. So you said that he doesn't give forward guidance. He gave it 3 years ago, and he delivered it perfectly. And so go back to read that letter. You might see that differently, right? And again, the reason why he just doesn't come in and say, oh, every single quarter we're doing this, we're doing that, we're doing that. He might change his game plan, right, in a bit. And then he could be able to do that without, letting anybody knows, right? Now you could say that, oh, it's because it's an element of surprise. We like surprise here, right? I'm sure Wall Street loves surprise as well. And so, it's a time thing. And it's ridiculous. Block him. I know, it's like at this point I think I'm talking to a wall here. It seems like Winthrop, no debt means no plan for growth. Like, what? Are you kidding me? That is the plan to grow. Do you know what debt mean? Do you know like if you have debt, what is that? That's you restricting growth just by having debt. So by them paying off debt, that is growth right there. What are you talking about? It's like, what the heck? And again, this is the society that we live in right now, right? And again, I'm talking to, I don't know how old you are, Winthrop, I'm talking to probably a generation of debt-based mindset here. That debt is good for some reason for companies to be had, right? It's like, oh, you gotta over leveraging yourself in order to make revenue higher and higher, right? Without knowing what's going on. Why are you doing what? Why would you take on debt in order to make more money? Well, the only environment that you're taking on debt to make more money is cheap money, right? Right now we don't have cheap money, Winthrop. What the hell? And so, again, just by you stating that statement, it just tells me everything about you. You don't understand the value of a dollar here. And so, okay, well, hey, remain to be seen, right? To me, Ryan Cohen is doing perfectly. Being a good steward of that money. And if he doesn't do anything at all, that's great. Because you know why? He's probably could stash it at a marketable security. Treasury bonds. Like, didn't you hear me said $10 trillion of treasury bond is going to be sold? It's like, why not take advantage of that? Right? You buy government debt. There you go. Unless the U.S. is going to be crumble in a couple years, decades here, at least we get some kickbacks on that as a company. But yeah, anyway, I am going on and on here. But thank you so much for coming in though. All right. Oh, thank you. Not investing in the company is telling. Not reinvesting in company telling. Okay, well, that's on you. That's your perspective. What the hell? You have a different perspective on than me. So, I see it differently than you know. And so that's fine. If you don't believe in the strategy that is, the fact that we're a holding company now, that we don't have to reinvest in the company in order to make this company better. I mean, how do you not see the fact that we, what, do you want them to buy shares of GME, billions of shares without, like burning that cash? And so that they need the cash to do something else, to survive, to attack back, to whatever, to, protect the survival of the company for decades on end, right? And so that they could grow even more. Like fundamentally, foundation, building a strong foundation is what they're doing right now. And if you don't see that, that's on you. That's why you're a trader. Like you're not long-term thinking. You're not doing anything to build your life in a way that matters to the people, to the people around you. Come on. We need to go back to the principle of things, that, that you don't live in a vacuum. You live and you affect other people based on what you do. And I'm sure Ryan Cohen is aware of that. Let me end this real quick here, because watching Moran's, like, the last interview kind of ring trues to me too, because like I'm so glad that he feel the same way about how Ryan Cohen, the relationship with him and his father, right? He could have just retired as a billionaire, 30-year-old billionaire. He didn't have to do anything, right? But the fact that he saw GameStop, saw the opportunity, perhaps he saw the abusive nature of Wall Street, right? Coming in to kind of crush retail investor. Perhaps this is what he wanted, right? And I'm sure he wanted to build a legacy that lasts decades on end, and this is his name, right? His legacy to perhaps being the first trillionaire on earth. Who knows, right? But I think it's not about money to him. It's about being successful at whatever he does, and he's giving his all to do this with no pay. So if you don't see the value in that, Winthrop, then I don't know what your heart made out of. You're probably just one of those quick to act, quick to go, quick to leave, quick to eat, quick to whatever, right? Without thinking about the people that are around you. And so, yeah, that's just my spiel. So I'll end it here. But anyway, thank you so much for coming in. I appreciate you. All right. Thank you so much. Okay. Ryan Cohen, father taught him smart business, hardworking, and good work ethic. Yeah. He said he likes a challenge, of course. Brian Cohen is less than 10%. It's like, what the hell? Winthrop, come on. What are you... Man, like, is this like a script that you're going by? Like, is there a script somewhere? Can you send me that memo so I understand where you're coming from? Crazy. Alright, guys, that's all I have. I've been here for a while. But yeah, I appreciate the engagement, though. Appreciate you. Okay.